Now let's discuss about insolvency of a partner or insolvency of all partners. First of all, insolvency means if a person's asset is lower than his liabilities, then the person is said to be insolvent person. So, insolvent person is a person whose assets is less than liabilities. The liabilities are more and assets are not sufficient to pay off the liabilities. Therefore, he is called as insolvent person. Because in the partnership business, the liabilities of all the partners is unlimited. So insolvent partner will be the partner whose personal property is lower than the liability. And on the contrary, solvent partner or solvent person is a person whose asset is more than his liabilities, or his assets is equal to his liabilities. So there are two terms involved in solvency: solvent partner and insolvent partner. And one more term is there in the chapter: capital deficiency. Capital deficiency means debit balance of profit and loss account. If there is loss available in the business, it is shown in balance sheet asset side. It is not actual asset, it is a fictitious asset. It is not a real asset. The loss is not an asset, but it is recorded on balance sheet asset side. So profit and loss account debit balance, it is a kind of loss which are carried forward for year on year basis, and this is a kind of capital deficiency. So let's understand this concept with one illustration. So illustration number one: when one of the partner becomes insolvent, Vidya, Sharmila and Megha are partners sharing profit and loss in the ratio 5:3:2. Three partners are there and the profit sharing ratio is 5:3:2. Their balance sheet as on 31st March 2019 is given. Asset side: sundry assets, bank and current account of Mega is given. On the liability side, capital account Vidya, Sharmila and Mega given. Current account is also given, Vidya and Sharmila. Creditors and bills payable. They decided to dissolve the partnership firm on the above date as under. So this is a question of dissolution. First adjustment: sundry assets realized at 80% of its book value. Sundry assets realized. Second, unrecorded outstanding expenses 8,000 rupees paid off. So there is an expense, it will be paid off. So the adjustment will be made from bank account. Realization expenses amounted to 6,000 rupees. Sundry creditors and bills payable were paid. So all the liabilities are repaid. And fifth adjustment: Mega become insolvent. So this is a case of insolvency. One of the partner, that is Mega, became insolvent and 2,000 rupees were recovered from her private estate. So it means Mega's asset is less than her liability. So only 2,000 rupees were recovered. The asset is not sufficient to repay the liability. Only 2,000 rupees is recovered from her estate. So balancing figure will be borne by the remaining solvent partners. So the liability of insolvent partner will be borne by the remaining solvent partners. Remember, the liability of partner is unlimited. All the partners have to sell their private properties also to repay the liability of business. But in this case, the mega is insolvent, so the balancing figure which mega the due amount belongs to mega will be now repaid by the remaining partners Vidya and Sharmila from their private property. Prepare realization account, partner's current account, capital account and bank account. In this question we have to prepare current account also. So in the books of Vidya, Sharmila and Mega, realization account debit side, credit side given. Partners current account, partners capital account and bank account is to be prepared. So let's start with recording balance sheet asset side. Sundry assets 1,28,000 rupees. It will be recorded on realization account debit side. Two sundry assets 1,28,000 rupees. Bank accounts 16,000 rupees will be recorded in bank account debit side. To balance brought down 16,000 rupees. Current account mega 26,000 rupees. Remember, current account is in balance sheet asset side and assets have debit balance. So partners current account debit side to balance brought down. On the debit side it will come 26,000 rupees in the column of mega. Balance sheet liability side capital account. So partners capital account credit side by balance brought down. Vidya 50,000 rupees. Sharmila 40,000 rupees. Mega 30,000 rupees. Current account of Vidya and Sharmila will be partners current account debit credit side. Current account of partners current account of Vidya and Sharmila will be partners current account credit side by balance brought down. In Vidya column 6,000 rupees. Sharmila column 6,000 rupees. Mega nil. Sundry creditors and bills payable will be on realization account credit side by sundry liabilities. Creditors 28,000 rupees and bills payable 10,000 rupees. Total amount 38,000 rupees. First adjustment, sundry assets realized at 80% of book value. Sundry asset is 28,000 rupees. 80% of 1,28,000 rupees. 1,02,400. 1,02,400 rupees. Second effect will be bank account debit side to realization account 1,02,400. Adjustment number 2, unrecorded outstanding expenses 8,000 rupees paid off. So realization account debit side to bank account outstanding expense 8,000 rupees. Second effect will be bank account credit side by realization account 8,000 rupees. Adjustment number 3, realization expenses amounted to 6,000 rupees. Realization expense 6,000 rupees. Second effect will be bank account credit side by realization expense 6,000 rupees. Adjustment number 4. Sundry assets and bills payable were paid for 34,000 rupees. 34,000 rupees. Total of bank account will be 34,000 plus 8,000, 42,000 rupees. Second effect will be bank account credit side by realization account. And last, fifth adjustment, Mega become insolvent and 2,000 rupees were recorded and 2,000 rupees were recovered from her private estate. So bank account debit side to Mega capital account. 2,000 rupees recovered from Mega and partners capital account credit side by bank account. 2,000 rupees in Mega column. All the information we have recorded. Now let's close realization account first. Realization account debit side is higher. 1,28,000 plus 42,000 plus 6,000. 1,76,000 rupees debit side minus 38,000 minus 1,02,400, 35,600. These 35,600 will be distributed among partners in the ratio 5:3:2. So by partners current account, the amount will be transferred to partners current account in the ratio 35,600 into 5 divided by 10, 17,800 for Vidya. Sharmila, 35,600 multiplied by 3 divided by 10, 10,680. And Mega, 35,600 multiplied by 2 divided by 10, 7,120. This amount will be transferred to partners current account debit side, 17,800 in Vidya, 10,680 in Sharmila, and 7,120 in Mega. Now debit side total is more, 17,800, 10,680 and 33,120. It will be shifted to credit side and balancing figure will be 11,800 Vidya, 4,680 Sharmila and 33,120 Mega. It will be shifted to partners capital account debit side to partners current account, 11,800, 4,680 and 33,120 in Mega column. Now first we will close Mega capital account because the remaining balance of Mega will be borne by remaining partners Vidya and Sharmila. So Mega capital account debit side is more, 33,120. It will be shifted to credit side. So balancing figure of Mega column, 33,120 minus 32,000 rupees, that is 1120 will be borne by remaining partner in their profit sharing ratio, that is 5:3. So 1120 multiplied by 5 divided by 8. 700 rupees will be borne by Vidya, and remaining 400 rupees will be borne by Sharmila. So Vidya capital account 700 and Sharmila capital account 400. From partners capital account credit side, it will shifted to partners capital account debit side to mega capital account, 700 in column of Vidya and 400 in column of Sharmila. Now we will close capital account of Vidya and Sharmila. Credit side is more. Vidya 50,000 rupees, Sharmila 40,000 rupees. Balancing figure. This amount will be shifted to debit side, and balancing figure will be 50,000 minus 11,800 minus 700. 37,500 rupees will be borne by Vidya, and Sharmila 40,000 minus 4,680 minus 400. 34,920 rupees will be borne by Sharmila. Balancing figure will be to bank account, and finally it will shift to bank account credit side. Vidya column 37,500 and Sharmila capital account 34,920 rupees, and total of bank account credit side will be equal to total of debit side. One lakh 20,400. The account is closed. So in this question, one partner became insolvent and the balancing amount will be borne by the remaining solvent partner, that is Vidya and Sharmila. They bought the amount in cash in their profit sharing ratio, that is 5:3. And finally bank account will be closed and partnership business is dissolved.